Hello guys, we'll start shortly, okay? Just a minute. Hello. Hello. I guess you guys can hear me. Please, if you can hear me, indicate in the live chat. Hello, hello, hello. Hello. Okay, you're welcome, everyone. We go straight to what we have today. We're basically looking at the market. We want to see the opportunity the market holds for us. Yeah. So, as you know, we're only looking at gold. Okay. Let me go to the 4 hours time frame. This is gold. And we are on the 4 hours time frame. Before this, like I normally do, I want to see the high and the low of last week, the high and the low of Friday, and as far as Thursday. So I'll first of all go to the weekly. This is the weekly time frame. Okay. This is the weekly time frame. I have just one thing to do here, just one. I mark the low. As well mark the high. Let me be sure I'm correct. Need to take this up a little bit. Yeah. So this is the low and the high of last week. I always do this in yellow color. Then I move over to what? The daily. Move over to the daily. Just like I did the weekly, I have just one thing to map up here. I want to map out the high and the low of the previous trading days. In this case, it's Friday. This was the low of Friday. Okay? And the high of Friday, let us first change this color to enable me to know the difference between the weekly and the daily. So I'm going to put this one here. Okay, this tell me the high and the low of last week and the high and the low of Friday. Thereafter, I'm going to want to map the high and the low on Thursday. Why am I mapping this area? These are key zones. So I'll change the color. I use red for this. right? They are key zone, and traders trade this zone a lot, even the big institutions. In other words, market reacts significantly in these areas. Market reacts significantly in these areas. Okay? I am done. That's all I needed to do on the weekly and on the daily. So we have succeeded in mapping out the high and the low of last week, then the high of the low of Friday, and then the low and the high of Thursday. So thereafter, I go to a 4 hours time frame. This is the 4 hours time frame. On the 4 hours, I don't have to be looking at going as in that historical. By historical, I don't need to go far to start looking at what happened maybe last month, last 2 months, even last 2 weeks, last 20 weeks, or thereabout. Because the strategy I trade, the strategy that I am trading, is only concerned with the last break of structure, and from there we do our analysis. So we're going to be looking at what was the last break of structure in the market. Okay? So I'm taking my what? Liner. This was the last break of structure. Okay? And this was the what? Last change of character. So what do? I need to change this to my usual color. Okay? So like I said, this happened to be one, the last change of character. I'll put it there. And this one happened to be the last break of structure. I put it there. Okay. So we now have the last break of structure and then the last change of character. Now we know our what? Now we know both. Things are very much easier for us. So, since we now know the last change of character and the last break of structure, it is obvious to us that market is breaking structure to the downside. In other words, we are still bearish. Yes, this leg is a retracement. Market is not bullish. In the long run, market is bullish. It's bearish. While in the lower time frame, market is bullish. Right? In the higher time frame, market is bearish. While on the lower time frame, market is bullish. It is normally the case. The market does not continue to go up, right? It goes up. Like this, go down, up a little bit, down again, right? This is how the market behaves. Okay? So, what we are seeing now is a situation whereby after break of structure like this, market will have to go up a little bit and then come again, break this what? Next structure. That's what we are seeing. Okay, let me remove this. So what I want to say in essence, that this leg that is going up, you see here, is going to eventually come down, right? And break this structure here. You have a structure that needs to be broken here. Right? Sorry, it has to be exactly here. So there is a structure here that has to be broken. Then why do I put the break of structure here? I have to put it there because the condition I expect the market to meet before I put it here has been met. And what is that condition? On the 4 hours time frame, market has mitigated inducement. And if that is done, it is safe for me to put in what we call break of structure. Where was the inducement that market mitigated? Here was the inducement. Right? Inducement is one of our key entry zones. We use it as one of our entry model. when it is in the right place. When it is in the right place. Right? By saying we use inducement as our key entry model when it is in the right place. If this inducement was something around this area, we would have expected the market will mitigate it and can't break this what? Structure. But because it was not in the right place, we knew market was going to react there. As you could see, market reacted. When market got there, it was a sell, it gave a sell. But then I knew that it did not possess the power or the force capable enough that will push it towards breaking the structure. By saying inducement in the right place, what do I mean? When I trade my SNC, there's something we call trading range. Trading range ranges from the last change of character to the next break of structure. Not this one, right? This is the previous break of structure. This has been used. This only helps us to know the direction of the market, right? Helps us to know if market is breaking structure to the downside or to the upside. Now that we already know that, and market has mitigated inducement, we now have our new trading range. And that new trading range will range from the last change of character, right, towards the new break of structure which we anticipate that the market will come and break. So in that trading range, we have what we call premium, right, and discount. Premium and discount. This is what we have in a trading range. Then, in premium, we sell. In discount, we buy. Premium is when the price of a commodity is very high. If you have a goods you want to sell it when the price is reasonable, when it is very high, when it will favor you the more. And you have something you want to buy, at any point you want to buy something, you want to buy it at when the price is very cheap. So, in the trading market, what we do, we buy when the price is low, right? We sell when it is high. That's why I said this inducement was not in the right place. If this inducement was in the premium zone, we would have what? Buy here and be expecting the market to come break this structure. But it didn't get there. So, in my last week market outlook, I said so. The market will make some reaction here. You can go watch the video and then come towards this area. Exactly what I said is what market did. Exactly. Just go watch the video, right? What I'm going to say today now, this week is what the market is going to do. Right? Okay. If you know this strategy enough, you are able to tell what happens next in the market. All you need to do is to wait for your area of interest, and then once you get confirmation, you receive the confirmation you need, you enter the market. So now, we have our premium and as well our discount zone. Market is already in our premium zone, as you can see, right? So we expect that the market will come down. This market is reacting to the other block in the 4 hours. There is another block here, 4 hours time frame other block, that the market is reacting to, which was exactly what I said in my last class. This little thing you are seeing has given more than 150 pieces. This little retracement that you are seeing has given more than 150 pieces. As a matter of fact, I'm in this trade and I'm selling it. Market, normally I don't hold trade throughout during the weekend. However, market closed very early, so the trade has still there. It is my expectation that it will come down, but if it doesn't, I wait. If I'm going to wait, where am I waiting for the market to get to? Of course, if market break this zone, right? Market break this zone, retest it, I'm going to buy. So if market does something like this, say for where it is now, break it like this, come back here, I'm going to buy it to this area. Expect that the market get to this area, and thereafter come to break this, come and break this structure. Why did I say so? Okay, we have another flow here. right? Another flow here that possess the power, capable enough of pushing this market down, right? That other flow was not mitigated, that other flow is valid. So what am I saying? If market break this structure, remember, in this area now, we have a lot of things. We have confluence in this area. What are the confluences? We have 4 hours order block, right? 1. We have the high of last week here. 2. We have the high of Friday. Here too. Remember, Friday happened to be the last trading day. However, sometimes the high of the week and the high of Friday may not be exactly the same. Market may go up. Am I correct on that? Oh, yeah, it's the same. The high of last week and the high of Friday, yes, they are here. Right? They are here. What I wanted to say is that the high of Friday and the close may not be the same. And the close of Friday may not be the same. So we have the high of last week, the high of Friday here. We have a valid order block on the 4 hours. Okay? And we anticipate that this place may reject the market till market break this structure. Right? The market may come down from this area, right? From here, and then come and break this structure. But if that does not happen, what probably will happen is that market will break above it, retest it, and they come all the way to this area. Right? Once that happens, market will start coming down. If that happens, we'll wait and look for what? Confirmation to take the next trade. When I mean the next trade, I mean this next swing trade. The swing trade. A lot of trade will happen here, a lot will happen here, based on what we see on the lower time frame. Because if you are doing your analysis on the 4 hours time frame, you will be taking your trade on the lower time frame. Like you do your confirmation on the 15 minutes, maybe thereafter you go take your entry on the 5 minutes. So if this structure breaks, we'll take a lot of trade here until we get to this area. Once we get to this area, any trade we take here, we expect that it will come all the way to this area. So we can hold any trade we take here till market come and break this structure. So that is the swing trade for next week, if this happens, if this condition happens. Okay? You can only refer to this as mini swing trade. Like if you break, retest, you get a confirmation, take it until you get here. So let's see how this week goes. This is what I see in the market. Very simple. Okay? So a lot happening on the lower time frame at the moment. Just as market is breaking structure to the downside on the 4 hours time frame, on the lower time frame, which is the 15 minutes, market is breaking structure to the upside because it is bullish on the 15 minutes. Okay? Bullish because there is a retracement, which is the corrective leg. Thereafter, we expect the impulsive move. This is what I see in the market. So, this video, watch it, try to understand it, so that we are trading next week. I mean, the week that has started today, you get to know why we are taking the trades that we are taking. Thank you.